guys have been wanting this for a very long time. I've been putting this together piece by piece. There's not like there's a ton to it. And it does come back to sometimes using maybe a little bit of math, but it's just quick math. It's just kind of using your head going, you know, maybe a stock's opened at 2, ran to 8. You know, what's the lowest area? Well, let's do a 50% retracement. I'd say probably somewhere around maybe that, say, $5 mark, right? If it ran from 2 to 8, that middle ground would be $5, $3 up, $3 down, somewhere. And especially if you know, $5 a big support resistance line in penny stocks. Say it also ran into that earlier and showed that at first and came down, resisted there, then broke through it on the leg up, then came down and bounced off of it, formed that little sandwich I like, old resistance equals new support. So you know, hey, 5's got to hold. If we come down from 8, all the way down from 8, 5 doesn't hold, it's probably not going to hold up and not move the rest of the day. And so I'll get into a lot of prime examples like that. I go with 40, 50, and 60% retracements. Now, we want to make sure we find something to find, you know, that adds up and, you know, coincides with that. You know, not just, okay, 50% retracement, here we go. Well, on top of the fact, let's maybe 40% retracement on this one. Let's see if there's something that showed up in the charting that's going to make it maybe this area. And maybe this area too. You know, there'll be multiple areas in some of these tickers, and that's where you have to really define charting and be able to turn back time essentially and go, where was the last area that I really see, or the lowest area that if it doesn't hold these kind of maybe 1 or 2 areas, it's done, it's kaput. So the reversal lesson, the lowest area to look for dips and a reversal. Slide number 1. Oh, hold on here. Hold on, let's get back into that. Let's do that again. I forgot to, boom. I have to add a little bit, you know, a little bit of drama there. All right. Not as beautiful as Dex, but you know, I like to add a little bit there. All right, so AEMD. These are gonna be from all over the place, team. These are gonna be from, it was hard for me because there really wasn't a lot recently for me to go off of. There were some recent ones, but I had to go back through all, and that's why these may be a little kind of grainy. I had to go back through a lot of my recaps that I've done in past chart history, really, essentially, right? And find these plays that ran in the past, really were some spiking plays, and then found a good holding ground that was a good, right, area for reversal. So let's get into it. AEMD is my first example. We can see the low area that we are spiking up from is 360. We moved up to 1854. And so this is my prime first example of saying, hey, we went too far south. We didn't hold high enough up to make a true reversal. And so you have to kind of go back and do the math and go, even when we see the reversal, what's your prime ground going to be? You know, even if we saw the reversal here, which we did say, we'll call it the $7 area, right? Which we know if we moved to 1854 from 360, my area to me would have been somewhere, and I wouldn't have gone, this is a resistance, but I would have gone somewhere maybe around 10-ish. You know, the $10, which we know kind of like I just talked about, 5, 1, 5, and $10. Those are the biggest, really prime, natural resistance lines in penny stocks. You know, maybe around that $10 area. We saw the VWAP was there earlier. So essentially right about right here. You know, if that would have reversed, you know, because we went really high. So if this would have reversed here, we were probably still good to really get rocking and rolling. And you can see here at first how big and how far apart the upper and lower VWAP bands are, to where how tight they finally get. And what I always talk about, when they turn sideways, team, you can essentially call this a channel. And especially when they're so far apart, they're going to channel in between them. You know, we need big movement back up. We never got it. And so even if we do the reversal, right? So my point being, if we had to hold here, we did not, reversal didn't happen, correct? And so we come down, and even if we do see a reversal, oh, it's coming back up, it's coming back up. Anyone told me right here, if they, especially nowadays, I'd be like, there's no way, even probably back in 2021, like last year, even the last summer, I'd be like, no, there is no, less than a 1%, I'd call it a 1% or less chance that this gets back to the my 18 essentially 75 rule. 1% or less chance down at 7. Literally, right? We vary so seldomly with all the tickers that run, which are thousands every day, we'll see this back up over this area. And so then we have to determine where is the area that maybe we can run to, right? And so to me would be that kind of sandwich or wedge earlier where we did try to come down to and hold. We didn't, and came down to this area right here. So this area right here would be to me the top area, and as you can tell in the end, ended up being close to it. Went a little bit higher than that a couple of times, but I would have determined this area, like early on, like if someone said, no, if this is going to move back up, I can pre-market, you know me, if I'm showing up and pre-market and alerting, you know, and even not in here, you know, even in here, I'm like, no, at most, team, I guarantee you this only gets back up to this area, maybe, and even at that point in time, where was the other area? Right here, kind of like this area right here where the upper VWAP band was, like 1375. And as you can see, we never got to either of those areas. And so no is my point. Example number 1, know when you are too far down. When we have crashed that's even 60% barrier that I may talk about and show you that we just didn't get here. When we crash this far, we can see a reversal, but the reversal, even when the volume is crazy, like, you know, when we're hotter market, we can see some return. This just, you get my point. It was not going to happen here. We are not getting back up and over. Example number 2 here. I love kind of some of these again where they come down to, team. You know, it's perfect. It's beautiful. So that's what I go back to, and it's not going to be perfect math. So if we go back to say this area, opening up, you know, literally as it comes down to, as you can tell, it comes all the way down to $4. So we're literally gapping up from 4-ish up to 10.82. So we'll call it 10-ish. You know, that's a $6 range. So where would be that middle area? Well, if you do the math from, of course, 4 up to, you know, 10, so the middle area, 3 up would be 7, 3 down would be 7. So somewhere in that $7 area, and then even if you consider the 10.82 mark, I mean, look where we bounced. That really was about right at 50% almost on the dot. We bounced like somewhere around 7. I forgot where that was, but it's close to 50% on the dot. And here's what you do when I say you have to go back and coincide it, find something on the chart that may line up with it. So you go, yeah, you know what? That makes sense. Makes 100% sense. Anywhere in that area is where it's got to hold. If it does not hold this area, which of course this is, you know, me finding these examples going, oh, blows right in my mind. This is perfect, right? This is a perfect example where this comes down, finds a perfect shelf that was built. Look at this shelf, team. Perfect shelf that was built and forms or finds the bottom off of it. That to me is saying, hey, that is the bottom area, team. The bottom area that we can hold. If we do not hold that bottom area, you know what's going to happen? It's cracking. It's definitely done for the day. In my honest opinion, there really should be no reason trading that anymore. No reason whatsoever. Your areas to trade are right here and above. Anywhere above that and you're still good. Kind of like KVL today, right? We'll go back over that, and that really can be my last final example. But KVL is another prime example of saying, hey, it spiked. It still came down to pretty, if you look at how much it moved today, percentage-wise, it came down just as much as this moved, if you really look at it overall, and held a certain area, and that's where it saw a nice return back up, right? And so that's what you're looking for, is going, where was the open at? It was around, okay, or I should say not open, where do we gap up from? And we're not open at, but where do we gap up? Where was the initial movement at? The initial movement was from 4-ish area up to 10.82, so we'll just call it 10-ish, right? So about a $6 range. Half of that, somewhere in that area, is going to be 7. So you go and kind of do the math. If it was way up here, I'd say, hey, team, like if someone was saying, hey, AK, where's the lowest area do you see this going down to? I'd go to this platform right here. I'd say, well, here's the first, and that would be the first. This area would be number 1. If this doesn't hold, then I would go down to this right here, and this has to be the last area of, you know, like the last line of defense. Like I always talk about, the last line of support. That would be it. You're going to see a lot of these. They make a lot of sense. Here's a TNF. Now, I know it ran all the way up to $13, but we're going to consider this, right, from the 10.2 area, because this was a slow and steady mover, so you can tell it's not really gapping up. It was just dead. And then opening bell goes from 10.2 up to, we'll call it 12.4. So where's that 50% retracement area? You go down and look where it really bounced at. It bounced right around, what, 11, 15-ish, right over $11. So that came down to me, if I did the math, it was right around that 60% area. Now, it went down a little bit further than maybe some want to see, but you can tell there's a little shelf right here, and it just came down to about that $11 area. It went down a little bit further. Now, to me, that the low area would have been somewhere below probably that or this area right here, getting to about what that would have been, about the 1080-ish mark. Back below 11 and 1080, this stock is done for the day. There's no one that's most likely going to touch it. That becomes dead area back under that. The fact that it held somewhere, you know, close to the VWAP, it's not too far away too. If you do the percentage-wise, a lot of these on the VWAP, they're not that too far away from where they've moved from and to. And that's always what I'm looking at as well. You don't want to be too far away. A lot of people just say, oh, and I've gotten that in my sessions. Well, it's under the VWAP. You know, is it? No, that's okay if it's under the VWAP. We saw today with KVL. Look at the return back up. We're still going to see some plays seen under the VWAP 100% of the time. You just got to determine where that last line of defense essentially area is, what the last line of support is, that you can actually take the bounce. There's another great example. I love this one, ENT, and where it kind of cracked off from. And you can see the like perfect where these lines are in. And I did this in my session. I actually went back in the recap and was talking about this. So we have the spike up from the 450 area, moved up to the 875 rule essentially. You go back and do the math properly, right, or close to. This was close to a perfect 50% move back. The top one was around closer to the 40% area. The lower area was the 40%. And I like 2 areas here that had to hold. You see the upper shadow, close to the upper shadow, and then it comes down to support. Like there wasn't much in there. It was this bounce area right here that ran off of these 2 upper shadows. Then here, more of the candle, or the bodies of the candles, right? The body right here. That's where this actually bounced at. So those 2 areas, right? Because the bounce happened here off of that area. The bounce happened here off of that area. And so I'm saying, hey, anywhere around that, we'll call it 665 or 660 area, and just below 6.5, if those areas crack, it's done. It's done for the day. And you can tell then it's hitting the lower VWAP band. Obviously, it's super done at this point in time. And so we had to hold it, and especially you can tell in the end, this was the true area. It really came back to this top area. That's the one that was really trying to hold. It was trying its hardest. And when that started cracking, short was great to be had. Not like those shelves that I talk about that are built up. That's what happens a lot of time in those lower areas. Sometimes we bounce down and come right back up, kind of like today with KVL, right? Sometimes it's like this where you can tell that's the low area, which I had 2 here. I could easily determine 2, and it was really more so the 665, 660 area, whatever this top one was. And you can tell, done. No reason to trade anymore. No, unless it gets back above those set areas, right? Say it somehow does see a return, somehow, some way, which again is going to be like I talked about earlier, that 1% or less. Very few and far between. Very few and far between are we going to see tickers run back up. Let's see here, FULC. So FULC, here's another, I love all these, right? So this is earlier on. So we're running from, say, $11 up earlier on. So I'm talking about, because this is, early on, we're going, oh, great, FULC's done. This ran to 14.5 from around we'll just call it the 11.20-ish area. So, and that's why I'm kind of going over these from stocks that move $3, $4, $5, stocks that move like $10. So that way stocks that now have, there's another one that's only moved like $1-ish or so. There's plenty of examples here to let you know where to find that 50% pullback retracement area, or 40 or 60 at times. But it's always that 40, 50, 60 area. Also coinciding with something along with it with the chart. Here's a great example. Again, 1020 up to, say, we'll call it, well, it is 14, right around 14.5. So where's the pull? Even with this, and the beautiful U-shape, right? The bottom area comes back to where, if you look at where it bounced at, right close to almost 12. So 12 on the dot, had a high of 14.5, 11, we'll call it, what was, no, I should, yeah, 10.2. So 10.2, 14.5, do the math, right in the middle, 12-ish, we'll just call it 12, right? 12.20, 12, whatever, because obviously we move, it's a little higher, and that'd be like 12.20, 12, whatever it would be. That's it. That was around that 50%-ish area, 46, 40, 50, 60 area. It has to hold somewhere in 40, 50, 60. We cracked that area, which to me would really be below 12. You get that. Then you're down to the lower VWAP band. You're about done with that. You'll see some returns off the lower VWAP band, but very few and far between we see a return all the way back through the VWAP. We know sometimes we get those. I forgot what was it a few weeks ago where I got that one. I was like, wow, lower a VWAP band to upper VWAP band. But then I think it was a F maybe, but then it just completely crashed right back down. So again, we get very few and far between when we get the lower VWAP touch. We get reversals off of it, but we don't see anything back over the VWAP. Probably 70+% of the time when we see the lower VWAP band, it's very few and far between when we get back over the VWAP alone. And so I know a lot of you don't have the lower VWAP band, but you can tell this area, and then you can tell even here, just what I'm saying, moving up, you do the math, 50% area down to 60%, 14.5 is the high. You started from 10.2. You've got to hold this 12-ish area. If you start getting below 12, you're pretty much done for the day. Express, let's go shopping, but also let's trade stocks. So we're going up, and I'm always going back to where we're gapping up from, which they would consider, and me even too in this move, the move's coming from around this $3 area. I mean, what is it, about 3.5 or so? I'll call it something like that. It's pretty far down compared to what this open. I'm going with the opening area of around $9. So all of this, a lot of this comes back to, because that's where most traders are in chat, the opening bell to the first 30 minutes, an hour, like, hey, where do stocks need to hold? That's where I'm getting that question a lot anyway, or even throughout the day. Like, say if it kind of does slowly run throughout the day. Again, you always go back to where is it gapping up from? Where's that initial move and starting point from? And so in this point in time, and even here, I could do the math afterward, but let's kind of show you where it'd have to hold, right? And you kind of really does hold probably perfectly. Would be here again. So from the 2, we'll call it the 3.5 up to $9. So you do the math. This is about a 60% retracement area, and it's a perfect little move back down, right around that double bottom, right? So there was a little bit of, I've meant to extend the line there. It didn't come quite down, and they didn't hit there. They were hitting a little bit above it. But this see these upper shadows right here, team? That to me was kind of the end-all be-all. As in these little upper shadows at about 510, 515. I know it's a little bit lower than what we like, but that's when I'd go, okay, and you can tell because where the lower VWAP band is, that to me is where it would say end-all be-all, we're done. We're definitely done back, especially back below 5. It's 100% done. It hit a little bit above that, but this is another one of those areas where you can see it went a little bit lower than normal, and we still see a massive return. Now, of course, the market was super hot this time last year. Look at this. Oh, imagine this January. Imagine us seeing a play go from, and holding its gains. Anyway, Express. Then on the move up, let's look at it. So we'll say 6 is the low, 5.5 to 6, up to 14. So the move there was probably what, about $9 or so? We'll just call it $8. We'll just call it $8.50 or so, right? So what would that be? $5 pullback. So if we come up to $14 look at that, $5 right there. That'd be at most, because we're moving up from, say, 5-ish area that's somewhere in that 5-ish area up to 14. And look at this, off of that little upper shadow look at perfectly off of that. perfectly off of that. Did not mean to go up. You know, team, so it's kind of, and I know you have to do quick math, but it's not that hard to do quick math when it stocks up, you know, up here and hovering around. You can go, okay, where's the low pullback going to be? All right, so if it's spiking really, the initial spikes from, say, like the 5.5 area on the run up is from, say, 5, you know, the 5.5 area hit 14. Okay, oh, on the upper shadows right here, that is pretty close to being, you know, maybe a little bit lower, but that 60% area, but that's just about what it did though earlier. You know, that's where I want to jump in. So always, you know, always kind of look at that, team. It goes back to, again, the more you look at these and the more charting, and I know maybe some of this doesn't make the most of sense. Maybe it does make some sense, but you know, you want to look at charting 100% of the time. Where is the top, the opening move at? You know, it's at $3. You know, it moved up to $10. Okay, so probably somewhere around 5 at the lowest, maybe somewhere in the $5.50 to $6 area is where that return is going to be, right? That's where that 40, 50, 60 area is at. Then look at the charting on top of the fact and go, okay, what else helps that out in past chart history, whether it's, you know, intraday, like I've shown you 100 times here, right? So like intraday, something that shows you in the past, okay, upper shadow, bounce there, bodies of candles, bounce there, those two areas, do the math right, that's about that 40, 50, 60 area, that's it. If it does not hold that area, and it has to be like 40% of the dot. You know, it's not like you have to do the calculator thing and go, okay, where's 50%? Right on that. You know, it's not that. It's kind of calculating in your head where close to where that 40, 50, 60 area would be. Then also going back to past chart history in the intraday and going, cool, that's going to be the area. Or let's get into some more. I want to get into a couple of these other ones real quickly. Or where it may sometimes have to use what? Daily history. So IMRN. And this pullback went up to about, we'll just call it 13. I know the upper shadow hit 1364, but you can tell this is 12, that's 14. The tops are right about 13. Top here at 13. We'll call 13 the real prime resistance it moved to. We started and we moved up from actually the day before. They actually moved up from the day before at about $2 area. So from 2 to 13. So that middle ground area to me would probably be somewhere around what, 7-ish, right, or so, 5 up. What's that, 6 down, you know, it'd be up at the lowest area, 7, maybe 8, you know, I doubt the 850 area, but 8, you know, maybe ish 8 though. It may go down a little bit further, which would be the 60, if you do about the math, it'd be about 60%, and it'd be maybe just below, around that $7 area, a little bit below. And so when you do the past chart history, team, and why this came down to, and I remember loading this in chat, and this at like 660, I think was the low this day, right around 660. Do the past chart history right here, and I remember loading that area, and I wasn't right on the dot, but I think I was at like 675 or something along those lines. But I was going to past chart history where this candle, you know, where this candle opened up at, where this high of day was at, where there was a couple of bounce, you know, you can see a lot of the upper shadow and lower shadows or whatever. I just took a screenshot of this. I did this earlier. I was like, I remember it was the daily on this one that really stuck out, and why that low could come down to like that 660 area and may not come down there because as you go back, there's nothing right here, and there, because of course it was spiking up from 2, so there's nothing, as you can tell right here. What was it? Yeah, you can see it spiking up. I thought it was coming up from 2. I thought it was coming up from 2. There was nothing holding. There's nothing, right? You got to go to past chart history. You, as in the 1 year, 1 day. You know, at least 6 months. If not, I always use the 1 year, 1 day. If not, for you, sometimes have to go further back than that and go, okay, where is the bounce? If this does come down, which it was that day, right? It's coming down. It's coming down. There's nothing after this lower shadow. Right at 8, which I would say that could be the first kind of high area maybe, and it tried to hold 8 for a while. Where's that next low area to try to hold? You then, team, have to go to past chart history and try to justify that. And here's a ending with the most perfect bounce. One of the most perfect bounces me and Deck ever caught in chat was this right here. This stock is up instantaneously again from 250. You can tell news came out instantaneously 15. Oh God, who's gotta love these? 15 minutes before the market opens. This goes from 250 all the way up to $7. I mean, in 3 candles, team. I mean, right? We love those. So look at it, this tumbling back down though. Me and Deck at the opening bell were both alerting, going, "Hey, we like this sandwich at 4-ish area, but if you go to past chart history, look at and I've gone over this alert. I've gone over this lesson, or I should say lesson. I've gone over this ticker essentially, this essential cap R, this trade, and so many lessons, team. It's ridiculous, and this is one of the main reasons why I've used it in a few different ways. But this comes back to perfect to a low area it needs to hold. You go back and kind of do the math, coming up from 2.5 up to 7, 4-ish to me, which it did come a little bit lower, and that's why we kind of found an area a little bit lower we liked. 4-ish would be the lowest area. That'd be about that 60% retracement area, right? And so then we go back to past chart history and see all 375, 375, 370. All look at all these upper shadows. Look at that. All those upper shadows at 375 going, man. I'm going to put our orders a little bit below around that 375, from 4 to 375, but 375, that's the prime area. And that came right to 375 almost on the dot right here, right on the dot, and came flying back up. It went over 7. It went even back over the high of day right here in pre-market, and this actually went to like 8 something, 880, the 875 roll essentially that day. This went crazy, you know, all the way down here. And why? There wasn't, and again, like the last slide I just showed you, there was nothing holding it up. I mean, there are these small little intermediate wedges, but there's nothing really holding it up. Kind of like the last one, kind of like with the 8 area. 4 was kind of an area I did like, and it does show right here. But other than that, then you go to past chart history team and look at all the upper shadows. Some go a little bit higher, right? Probably that 390-ish area, that one. This one went to about 385-ish or something like that. You know, but right around 375 was the area. Anything and above that was good for that low area bounce. And look at the return. So, main thing. Look at where the ticker's opening up and gapping up from, even if it's the day before, right? IMR, remember this one I just showed you. This I know it kind of doesn't show it all the way. This was actually from the day before. The other ones I've showed you, right? From the day before. So when you come into the opening bell and we see a pre-market high team, or we see a high right at the opening bell, you know, like a lot of these, right? So we see a spike at the opening bell. You're going back to what the initial run came from to find that 40, 50, 60% area for the pullback, right? You know, any of these, where the run initially comes from, you're finding the 40, 50, 60% area. Now, when they make the leg 2 up like this, most times you're not going to necessarily use this anymore, because there's no way, you know, from this area all the way up to this area, are we going to hold if we come all the way down anymore, right? If whatever the area may be, that's not going to be where we typically are going to hold. You know, 9 was where we ended up holding from, say, what was it, like 350 up? That's not, you know, that's really, it's not it. You're not going to use that. You're going to use the area where we started the leg 2 run from, which to me, in my opinion, would be somewhere around here, that 5.5 mark, which this doesn't happen too often. Usually it's like this. We get the spike up and it runs. We get the spike up and it runs. We get the spike up and it runs. And so that's where we're getting most of our runs from. And so what you're doing, where did this open up from, you know, or gap up from for the most part? Where was the lowest, you know, low area? Okay, 10.2 up to 12.4. Where's the 50, 60, 40 to 60 area? You know, we're going from $4 up to 1082. We're at the 1082 mark, and you're going, man, I missed this run. Oh, I can't believe I missed all this. Okay, where would be that low area bounce that AK talks about? Which, of course, you can find many along, as you can tell along the way. But where would be that low area that, you know, if I just don't want to chase, I want to be somewhere that's super safe, real far down low. I'm going to go in and do that 40 to 60% area, and then find something that lines up perfectly with it in charting, right? And so, and then if you have to do the daily, use the daily. I mean, this was a perfect example. It's up from 250 up to 7. I don't trade pre-market, right? So I'm going, I got to get a good, I want a good bounce here. Where's it going to be? So I do like 4, but then I've got to pull up past, because there's nothing showing me here. There's nothing that really, you know, because it's early on. It's too early on to find anything. So I had to go back to past chart history on the daily, the 1 year, 1 day. Otherwise, what I'm always doing is what, team? I'm using the charting from before. I'm going, okay, this is up from, you know, at the opening bell. This is up from 3 whatever, up to 9. Where's the 40, 50, 60 area? Okay, really the lowest area I see. And of course, in pre-market, I go, man, upper shadow area to lower shadow area, this perfect little sandwich area. Man, that's super nice. Even maybe down to, like I said, that 510 mark, that'd be the lowest low of lows that can move to. Otherwise, it's going to crack off and traders are done and not getting nuts. Some traders will still move into it, but super, super few and far between, you know, does it move back up into where it's actually a valuable play anymore. At that point in time, you can cut it off, move it off your watch list, and it's done. Hopefully that helps you out on the, you know, on the lesson that I've been wanting to do for a while for reversals and what to be looking for. In what I'm looking for, that 40, 50, 60% area of reversal from where it started up at to where the top was at. And when it's at the top, look where it started at, find that 40, 50, 60% area, and find something in the charting that justifies, oh yes, 750. Oh my gosh, that's perfect. You know, $2.25. Oh my gosh, that's perfect from, you get my point. So find your areas from the start to the top, do 40 to 60, and then look to the left and look at some good charting that really bodes well and helps and really can actually line up for a good bounce play.